Hi, Mr. Will.
Hello.
Hello, how are you?
Good. Can you see me?
Yeah, we can see you.
Oh, here we go.
Now we can see some of you.
Excellent. All right.
Okay, Dr. Jain, should we start?
Sure. It's
Yeah.
your show.
Okay. So, hi everyone. Welcome to Game of Fintech. I'm your host. My name is Alia Noor, and I'm the founder of XpertsLeague. And I'm working at Ahmed Al Akbari Chartered Accountants, a management consultancy firm in UAE as associate partner. Expert League is a learning platform where you can access latest practices, updates, and innovation in the fields of fintech, audit, tax, and finance, with the vision of maximizing time efficiency by connecting industry globally acclaimed experts to share their success stories, opinion, advice, and best practices. Where everything is connected. You can learn, you can implement, and you can think like an outthinker. The game of fintech gives you latest development in fintech space, industry giants, players, current moves and challenges, and how to survive or thrive in this environment. So welcome to first episode of Game of Fintech. There was never a bigger or greater TV show in history than the Game of Thrones, spanned over 8 seasons. But what has captivated the audience around the world for 8 seasons? The story of battle at two fronts, the war for control of the Iron Throne among powerful families, kings and queens, knights and renegades, wage war against each other in order to gain control over the mythical land of Westeros. War against the army of death, the rising force after millenniums, which threatened the existence of living man. The season has ended, but winter is here, and so the game of fintech. The global financial crisis and subsequent Great Recession influenced the younger generation of millennials. The failure and shortcoming of some of the world's largest and most penetrated banks and financial institutions were highlighted. The crisis led to a number of new restrictions in form of new regulation for banks. Today, financial crisis is seen as having taken place in the intersection between the weakening of the traditional financial service providers and simultaneously rise of new technologies that led millions to the development of what is known as today fintech. These fintech companies aim to provide clear alternatives to traditional financial services models and continue to help shape the financial services landscape of the future. So there is no shelter from the winter. The industry is changing. Optimization, automation, robotization, digitalization will change the game, redefine the rules of the game. But what has happened? Just give me a second. Let me share the slide. Can you see the slide?
Yes.
Okay. So what was considered new and disruptive has become the norm and prerequisite for all players. The science fiction has become the science fact. This digital innovation, the blockchain, artificial intelligence, big data, predictive analysis had changed the game. If data is the new oil, artificial intelligence is the new electricity. So welcome to the digital age of information, where everything is data. Data is the structured or unstructured. It's large and complicated set of data. In 2000,
Hello.
Miss Alia is mute. Can you unmute it?
What's happened?
yeah, can you hear me now?
Yeah.
Okay. By the start of 2018, there were almost as many bits of data in digital universe as there are known stars in the physical universe. That is 33 zettabytes. And it is expected by 2025, it will be 175 zettabytes. So there have never been people had so much information and content to choose from. Every minute you are bombarded with information. Nothing flows more freely than information. It means that information is spread faster than ever. It has radically changed how buyers read, shop, and process information. And what Amazon, Google, Netflix, the smart digital technologies are doing, they are redefining this crude oil. Facebook knows what we say, but Google's know what we think. In the past, we were searching for the information, but now in future, information is searching for us. But there are also threats with these technologies. The very known case of Cambridge Analytical data scandal, the Facebook. In 2018, major political scandal, Cambridge Analytica invested personal data of people from Facebook, data of millions of people's Facebook profile without their consent and use it for political advertising purpose. The ex-CEO of Google said, if you have something that you don't want anyone to know, maybe you shouldn't be doing it in the first place. Amazon is an even bigger threat to privacy than Facebook. Amazon openly admits that end goal is to run your entire life on Alexa. Do you think this is ethical? What is ethical relevance for the fintech? That's what we are going to discuss in this episode. And we have with us the famous Dr. Jane Thompson and Mr. William Banks. So I would like them to take it over from here and introduce themselves and what are their views we're going to discuss in this interesting episode. Over to you, Dr. Jane.
Thank you very much. And that was a terrific introduction. So you've made the way easy for us. So my name's Jane Thomason, and I've been working in fintech and blockchain since 2016 and ran the famous London Fintech Week and London Blockchain Week, and invests a lot of time in trying to keep up with fintech trends and blockchain trends. But in particular, think about the impact on social transformation, on humanity, and issues like ethical issues in the application of different fintechs and blockchains and global data governance, because as Alia pointed out, as we get more and more and more data into the hands of many, many people, they start to know more about us than we know. And that's one of the ethical risks of fintech. So I look forward to this discussion with you, with my good friend and colleague, Will Banks, who can now introduce himself.
I think I was on mute then. Thanks, Jane, for the introduction, and very grateful to be involved in this event. So my name's Will Banks. I'm the CEO and co-founder of Data Capital. We're currently in the process of building a new bank called Infinity, which will be the first product disruptive bank in Australia, where we will be offering dynamically structured and intimate banking products personalized through real-time synchronization of every customer's changing financial position, which will be there to support their well-being, which is obviously partly around ethics. And we're looking at creating around about 150 jobs in Queensland over the next 3 years. I've got 2 decades of banking experience across retail, investment banking, including capital markets trading. I've been a troubleshooter for a decade, first decade of the 2 decades. Second decade, I was helping banks building through licensing stage, launch and growth. I've also guided other businesses through the regulatory process, such as electronic money institution brokerages, for example. I've sat on numerous panels. I've written a number of articles and publications, and been interviewed across a number of media channels. I've also been a board advisor for a number of financial service businesses, and also been responsible for the £260 billion global balance sheet of one of the banks. I've been involved in a number of banks, from Bank of China, HSBC Investment Bank, Deutsche Bank, to Royal Bank of Scotland, Santander Investment Bank, for example. 2009, I wrote the credit guarantee scheme model for the quantitative easing program, part of the GFC for the Bank of England. And 2011, I received the Lloyd's Banking Outstanding Contribution to the Bank Award. UK FCA multifunction approved person, and in 2019 I was extremely grateful to be awarded the first of the 124 Global Talent Visa out of Australia, where the whole of my family is granted permanent residency in under 3 weeks. So I was the first within fintech globally and the first within Europe to have been awarded that. So we moved here in June and we're living the dream.
Well, it's an honor to have both of you, such a wonderful profiles you both have. So it's going to be a very interesting session, I hope
Jane,
so.
sorry, Jane, you're on mute.
Am I mute?
No, Jane is.
Yeah, Jane
Thank
is
you.
mute.
I just said it was wonderful to have you in Australia, Will, and looking forward to being on the panel.
Thanks for having us.
Yeah, such a great profile you both have. Okay, then let's start the game. So first question is with Dr. Jane. Why do you think ethics are relevant to fintech, and what are some of the issues that arise?
Thank you. Well, we learned and we know that ethics are really important to the financial sector in general. But I think the thing about fintech that makes us need to think about it even more is this issue about the volume of data that fintechs hold, their capacity to be able to line that data up with other data sets that they may be able to get access to, and to create profiles of you to the point that they can influence your purchasing choices and your financial product choices. And it's the speed and the scale of the automation in fintech that means that if something happens, it can happen bigger and faster than ever we've been used to before. I think the other thing that's important, and I'm going to talk about it a little bit later when we talk about algorithms, is the more we have machines doing the work, not people, there's a risk that people will stop really thinking about what the machines are doing. So getting the appropriate governance and compliance systems in place are critically important, because when you're distant from something that a machine is doing, then you're not necessarily paying attention in the same way as you did before. So the key issues really around ethics and fintech is, first of all, trust. They hold your data, they hold confidential financial information about you. You need to be able to trust that your data is secure and protected, and that third parties who have access to your data, who are the cloud providers for one, are going to be looking after it securely, managing it as sensitive data, and making sure that the data is retained or disposed of appropriately. The second one is this accountability, because when your data is in the cloud, who's responsible for it? Is it the fintech that you're the customer of, or is it the cloud provider? And there's a model that people call the shared responsibility model. But in my view, the fintech, the company that you've engaged with, has the ultimate accountability for your data and for their relationship with cloud providers and ensuring that cloud providers keep it secure. The other point, which I mentioned before, which I'll come back to again, is this proximity. People are getting further from the decisions that are being made, the automation, the algorithms, and this can make them feel less responsible. So an issue about how you make sure that all of those automations are checked and thought about and ethical issues are considered in advance is really important. And then the final one, of course, is privacy, because a lot of the information that fintechs hold is private information about you that you probably don't want to be on-shared or on-sold to other people. So just in summarising, it's really the amount of data people hold, the interest that other parties will have in accessing that data and using it to be able to influence you, and you being able to make sure you can trust your fintech provider, trust their third-party providers, and know that your data is secure and well looked after.
Yeah, thank you, Dr. Jem, for highlighting such a major issues which everyone is facing nowadays due to an algorithm, because they control our lives. Everything, every data is spread across the world. So what are your views, Mr. Will Banks? Have fintech ethics changed during COVID? Because this scenario has been always be the same. Always data privacy is the major issue. What has changed during this COVID? Because of COVID, everything has become more digitalized. Everyone is on mobile phone, no physical interactions. So data is spread more quickly, and cyber crimes are also enhanced and aggregated with this COVID era. So what are your views?
Um, so I think the overall ethics during COVID have been very interesting. So there's been a big focus on businesses, individuals, and economies really across the globe, as all of those are affected by COVID. So, like the governments, banks are really critical in ensuring that we all come out of this the other side with minimal damage. And and governments are very aware of this. So there is one side where the banks are trying to help, but also the banks have been largely mandated to support businesses and retail customers during this time. So, for example, mortgage holidays, the relaxation of late payments, fees, etc. But some banks have taken this to another level outside that mandate, so providing additional support to customers. So, for example, those customers that are maybe vulnerable, maybe older, those of an older age, for example, some banks have taken the approach to call those customers up on a fairly regular basis just to make sure that they're okay and that they're not under any kind of financial stress, which could cause them, medical issues. And also they just want to look after their customers. So this could not only be seen as a good retention policy, i.e. retaining customers, but it could also be used to attract new customers from those banks that have been less supportive. So again, for an example, where businesses have been forced to only take card payments. So during the kind of the height of the pandemic, for example, in Australia, and you've had this in the UK as well, but a lot of businesses, small businesses, were forced to take card payments irrelevant of the size of those payments. So what that means is that there's been a cost associated to taking a card payment on all transactions, and the businesses have, they're told by the government this is to avoid the risk of COVID infection on cash. But actually, what that's meant for these businesses is that they've still had to pay their transaction fees. So the banks haven't, released them or lowered them and said, we understand you're under pressure, you're mandated by government to do this. So you could argue that on the other side, the banks have been seen to be supportive, but on the other side of it, they've actually made some money out of it. So it kind of works both ways.
Yeah, so it's kind of a win-win situation, you think?
I think not necessarily a win-win. I think there's also a lose. So, I mean, if you're a bank that's doing what you're mandated to do, then that's fine. But if you're a bank that's not only doing what you're mandated to do, but you're also adding additional support, which you're not mandated to do from government, and customers recognise that, it's a very good marketing tool to attract other customers from other banks. But it's also a very good retention policy. So, for a bank, it's twofold. It's attracting customers to the bank, but then you want to retain them as well. So if you're seen in the market as a bank that's been extremely supportive and friendly to businesses and individuals during COVID, I would have thought that many customers who are either banking with you or not banking with you will be thinking about that, especially if they were banking with an institution that hasn't been so friendly. So I think it's a win-win on that side, that you can obtain new customers and retain your existing customers. It's a lose if you not behave properly, and therefore you lose some of your customers. But on the short term, it's a win all round because they're going to be making money on the transaction fees.
Yeah, that's true. So over to you, Jane, now. How do you think that this automation create new ethical questions for fintech?
Yeah, I'm going to answer that, but I just want to, for one moment, pause back to that issue of the customers and keeping the customers happy, because I think that one of the changes that is taking place with fintech and the amount of data and the way the platform companies are behaving is that customers have got a lot more choice now, and so a lot less loyalty. And so whoever is able to hold the customer and offer them different services is probably going to win in this environment. And that's why one of the issues, this has nothing to do with ethics, but I think it's important, you know, to be watching as the game of fintech unfolds, is that the platform companies, Amazon, Google, Facebook, and so forth, have the customers and they're starting to offer them financial services. And so it's not just banks and fintechs, it's also the platform companies that are starting to use, you know, fintech to be able to provide services to the customers they already have. But I'll go on to the issue that you asked me about, is around ethics and automation. And it goes back to the point that I made earlier about the proximity you have. Because if you have a customer comes into the bank and they tell you your story, they tell you their story and they want to get a loan, and you meet them and you see and they look like they're credible and serious and they have an intention to pay back the loan, you'll probably give them a loan. But if you've already got an algorithm programmed to make decisions in advance, then customers may well get treated differently. And that kind of ethical decision making that a bank manager or a fintech might make if you're dealing direct with the customer changes. So there's a kind of a risk that automation reduces the ethical awareness of financial professionals and their sense of responsibility. The second one is it may reduce customers' awareness of ethics because they're simply getting automated messages from the fintech. And then the third one is that this could lead to automated financial surveillance, because the fintechs know more about the consumer than the consumer knows about the fintech, and they can aggregate these data sets with other data and influence consumers to buy different products. So, you know, that's a risk with the automation. The other issues, ethical concerns around automation, is less about the automation and more about the data sets that are being used and whether they have some sort of bias in them, the way the algorithms are developed to ensure that they're considering different ethical considerations that might be involved in a decision, and the transparency about the basis on which decisions are being made. And a lot of these things are very opaque. And so the customer doesn't know what the algorithms are doing, how they're making investment decisions, how they're making decisions on lending and other services that the customers might want. And so even if algorithms are a natural extension of the human being who built them, and the governance of the fintech that sets the ethical framework and standards around the way that the fintech's going to operate. So it's very important that in fintechs, and I'll talk about this a little bit later, think really seriously about how they handle data governance and ethics and the ethical decision-making framework within their organization, and ensure the people who are building the algorithms understand those kinds of boundaries.
Yeah. So I think the quote is very well said. Somebody said that humans are for the questions and computers are for the answers. And I believe in that left side brain and right side brain, you know, the scenario that humans should be doing the critical thinking, decision making, emotional intelligence thing, because these computers are only for 3Ds, dull, dangerous, dirty work. That's my opinion. And I agree with whoever said these things, that they should be limited to these kind of algorithms, and those emotional and ethical and critical thinking should be with the humans. What do you say, Dr. Jeff?
Look, I mean, I think that that's the issue, is the complementarity of humans and machines, but ensuring, because as I said, I think the risk is that you know, the CEO of a company isn't necessarily the person who builds the systems and builds the algorithms. So unless the CEO themselves and the board are taking leadership and are ensuring that the kind of ethical framework for their organisation has been communicated, that the difficult ethical questions are being debated and discussed so that the people who are building the systems understand how to include those in the systems that they're building. And that'll always be the human side is as you say, the emotional intelligence, the judgment, the compassion, those things we haven't yet managed to teach machines, but people need to be taking the accountability and exercising that judgment.
Yeah, that's very true. Very true. Thank you, Dr. Jane. Over to you, Mr. Will. Can fintech ethics be improved further within the banking sector? What are your views?
Sorry, say that again.
I want your views on, can fintech ethics be improved further within the banking sector? Fintech ethics.
Yeah, absolutely. Absolutely, they can be improved.
Because banks have so many rules, regulation. I know KYC, ML, everything is there. But how can point of view can be improved?
Absolutely. So, I mean, first of all, I mean, the answer is yes. As the sector changes and there are new innovations, new and improved ethical stances will be required. So, for example, legislation around digital loans origination, as you mentioned, the digital side of AML, KYC requirements. So as we move away from the physical in-branch verifications, new requirements will be needed to be put in place to ensure that these new digital processes are robust. I mean, another question is, how is data stored? Is it because that's becoming more and more important? Is it encrypted? Can this be breached? Especially with things like blockchain. The other thing is as well, though, the opposite can occur as well. So, already APRA, which is the Australian prudential regulator, are finalising changes at the moment to lender obligations. So, in determining things like affordability checks for mortgage customers. I mean, my concern around this is that could open the door to aggressive selling with the result of unaffordable loans. So that is a level of concern. But at the same time, what they're also doing is looking at some of the banking requirements in terms of ensuring banks behave in a certain way that again safeguards its customers. So these are new requirements that they're considering at the moment, especially with this rise in the number of new banks which are launching. I guess the other thing is as well is there is a difference, and I wasn't sure whether or not this is another question, but there is a difference between legal conduct and ethical conduct, and they're not necessarily the same thing. I mean, did you want me to talk about that?
Yes,
please. We'd love to hear about that.
Okay, so I mean, there is also, so it's not just on the, there is this, will things improve? But like I said, there is the legal side of it, conduct, and the ethical conduct. And, the way I look at it is that, there's, individuals or, customers will look at a bank and say, yeah, their conduct's good. But, the legal side of it could be legal conduct, which is really their base case requirement. So, this defines really certain mandatory behaviour. But are these ethics? And there are other things that banks can do which aren't set out in law or regulations, such as their own morals. So, for example, acting respectively or in an equitable manner. So, for example, passing on the base rate cuts in a timely manner. Which is actually in Australia has been cited in the Royal Commission as being something that wasn't passed on in a timely manner, which upset a number of customers. Now, that's not been a legal requirement. So that is not kind of legal conduct they have to follow, but it's kind of an ethical conduct. It's kind of it's a moral. It's the rate's been you've got advantage of a lower borrowing rate as a bank, but you're keeping that advantage to yourself and not sharing it. So that's another part. Other things around being transparent around the fees, not mis-selling products, that's another important factor. So, there's a legal requirement around that, but it's a fine line between when you step out of it being, or keep within being legal, but when from a moral perspective, it's not. So you would hope that some of these legal requirements are covered by banks in terms of their own moral compass. But actually history has probably shown otherwise when you look at the GFC. So, banks are required under their authorization to treat customers fairly, look after vulnerable customers. But that doesn't necessarily mean that they always do the right thing. So I think it's an interesting space with regards to how those certain those views kind of overlap. And there's also just one last bit on this. I mean, there's also the matter of internal and external ethics as well. If the environment can be such within a business or bank that it drives an internal culture of hard selling, this will be replicated by how those bank employees, for example, how they behave in the market. So you could call that idiosyncratic ethics driving the market-wide ethics. And again, the GFC and the LIBOR fixing are good examples of this.
Yeah, I totally agree with Mr. Wills. What about you, Jane?
Look, Will, I think you make some really great points. And this really comes on to the next point that I wanted to make is, as you say, there's legal, there's compliance requirements, and anyone who's operating in the space needs to follow those. But I actually think that building an ethical culture and being known by your customers to do the right thing is going to become a competitive advantage, because I think banks, especially in Australia, have been used to a world where generations of families would have banked with Westpac or ANZ and never changed their bank and never actually looked at whether the bank was giving them competitive rates or anything. That's changing, and particularly with this new digital generation who are going to be the people who have the money and who will be using financial services in the future. They don't have that sense of loyalty. They've grown up with the fintechs and the digital offers that are coming at them from the platforms, and they're going to take the one that offers them the best deal. So I think one deal that people can offer, if it's around that culture of ethical behavior, of transparency, of fairness and accountability and so forth, I actually think those institutions will be the ones that will be successful in the future. I think the second thing, and again, we've seen it rather tragically play out, with the in the banking sector in Australia, is that the CEO and the board have to set that culture. And as you said, Will, if the culture's one of pushing and selling, not of actually trying to think about your customers and look after them. And if there's a benefit you can give a customer that's within your, boundaries, then that you do that. If the CEO and the board are asking those ethical questions, if they have actually, every bank's got an audit and risk committee, maybe they need to have, ethics audit and risk or an ethics committee, and some, fintechs and banks do. But this is where people ask those questions, and this is where people can give guidance to the people who are doing the automation and building the system. And so that kind of ethical leadership has to come from the top. Now, maybe in an ideal world, we'd have some sort of global ethical framework for fintechs that everyone has signed on to, and that hasn't happened and won't probably happen for a very long time. But what you do have as one model, for example, is the Monetary Authority of Singapore has developed a fairness, ethics, accountability and transparency set of principles for the use of AI and data analytics in decision making in 2018 as a kind of co-creation with industry. So they're taking a high-level principles-based approach as the Monetary Authority of Singapore, and they're working with industry to say, in Singapore, in banking and finance and fintech, here's a set of principles we expect you and we want you to be building and articulating through your business. So one is leave it up to the organisations, and another one is to create some kind of government influence frameworks that give guidance, not law, guidance to organizations about how they expect them to look after their customers.
Yeah, it's a very great initiative. I think it will be replicated in other organizations and other countries as well. What do you think, Will?
I think that I think it is going to be a very interesting space. I completely agree with Jane that it is going to give businesses a competitive advantage, especially the banks. I think that in Australia there's been a culture of the big four banks dominating, and I think that they've probably had the opinion of, well, actually, it's generations that have been banking with us, and therefore it's going to take a lot for them to leave. When actually what they haven't probably grasped is that you don't need to leave. The way that fintech works and the way that banking works now is kind of gone of the days to a certain extent, where you only bank with one bank, or you only bank with a bank and only a bank. There are now a number of what they call them non-banks and banks and other fintechs, and therefore, if you're banking with, whether or not you're a retail customer or an SME customer, but you're banking with one of the big four and you're not particularly happy, you've got an opportunity now, especially with the speed of which the digital banks can onboard you, that you can actually then switch and give those other banks a shot, give the other non-banks, the FX businesses, if you're looking at foreign exchange, you can give them a go. And with the new regulations as well now, if you then decide, for example, that actually you would rather than stay with those new neobanks and actually now close your account with one of the big four, for example, you could do that quite easily. And if you'd rather just switch off from the start and go to another bank, you've now got the current account switching service and all the open banking things, which again aid customers to help them, move from one bank to another. So I think all of these things have become very important, and I think the ethics side of things, it overlaps, or it's kind of synonymous really with how customers want to be treated. Ethics and how you want to be treated, I'd say they're pretty much the same thing really. And because of the options and the innovation that's taking place, especially in countries like Australia, it means that there are new options and that customers don't need to put up with the status quo. They can start looking around. So I think things are going to change, and I think certainly COVID has developed that. I think COVID's probably exposed a number of things where customers aren't happy. And I think even things like the regulator now, even looking at things like these payday loans, these pay later platforms and things like that. I know that the regulator is looking at things like that because there's a high proportion of customers now that are missing payments, especially around COVID now, because there's a global recession. So again, it's how do those companies treat those customers, or even can they afford to give them any leeway? I mean, from a business perspective, they may not be able to do that, and therefore that could be construed as being unethical.
Yeah, thanks, Will, for your insightful, views. Dr. Chen, I have a question. From practical aspects, like we are in the management, we are in finance, how should board and CFOs ensure that these processes are embedded and they have that ethical, embedded processes? How to ensure and how they can suggest in their organization if it is there, or how they can review that they need to be revamped, or your suggestions from this point of view?
So, and the first thing that I'd like to say is that it should be the board and the CEO. This is not the CFO or the CTO. If the leadership doesn't come from the board around the culture of the organization and the CEO of the organization, then the leadership are not driving this from the top. So that's the first thing. The second thing that they can do, and a number of organizations are doing, is adopt an ethical code of practice or some ethical principles and make them public about what
It's
it
like
is
code
that,
of governance, something like that.
yeah, that's right. I think the third thing is that within their board structure and the board committee structure, that someone within that structure is responsible for ethics. So whether they have it in the audit and risk committee or whether they have it in the remuneration nominations committee, I wouldn't have thought so, but find a place for it where at a regular basis, possibly every 6 months, there's a committee of the board that's actually asking those questions. So that's the first thing, and that's around developing a culture of risk awareness, making sure that people understand what is expected in terms of ethics, you know, the hard sell versus giving people, you know, giving them some leeway if they're struggling, if it's within the bank's capability to do so. And I think that's shaping the culture of the organisation and the expectations of people. But I just can't hammer home any harder this point that I think banks historically have been so comfortable about their customers. They haven't spent a lot of time on looking after their customers' needs and wants and understanding the whole person and so forth. And I think there's so much competition now in the marketplace, they're simply going to have to change their ways. It'll take a long time to unseat the 4 big banks in Australia for sure, but we're already seeing, as Will said, the fintech's coming in, he's building a digital bank, and you've got Revolut here, and you've got all of, you know, Afterpay and all of those different groups all here, and that's giving people choice. So I think that the final point is that you still have to have the procedures and processes. So you still have to have the risk management framework and the control framework to embed and monitor ethical values within the organisation. And you still have to make sure that a human being asks those ethical questions about every algorithm that's being built and ensuring that biases aren't going to be built into the way that the automation is working. But my view very strongly is it has to come from the board and the CEO. This is not the CTO's job. This is not the CFO's job. This is the board and the CEO's job.
So Dr. Jain, who will be monitoring it? The board?
Well, I think in the same way as, you know, the board monitors what's going on, they'll have policy papers and there'll be responsibilities in management for doing, whether it's the control framework or the risk framework, or having education sessions with the staff around ethics. It's like any other policy that the bank might have. It's got a whole management structure that goes with that. But my point is, it's got to be if you believe that ethics are important and your organisation is going to seek to take that leadership position in terms of being an ethical organisation, this is not a middle management job. This is senior management board setting the framework so that management execute it.
I think just to add on to that, I think ultimately, you know, who manages it. I think my view is there's actually 2 bigger parties that really manage it. The first one is the regulator, because there's certain legal ethics that you must follow, and therefore if you don't, you'll be in breach of your, especially from a bank, you'll be in breach of your authorization. And I think ultimately,
there is a role for RegTech in it also. That means.
Yeah. So yeah, correct. So, but I also think actually who monitors it are the customers, because if you get it wrong and you don't do it and you're missing something, ultimately it will be the customers who will tell you they get it wrong. You've got it wrong, because they will vote with their feet. And that's why things like getting regular feedback, listening to your customers is extremely important, because once they've gone, it's a lot harder to get them to come back. And therefore they are an incredibly important source of information. So I'd say, yeah, I mean, you know, 100% the CEO needs to drive it, the board needs to drive it.